All eyes are on Nvidia this week ahead of the company's earnings report out tomorrow afternoon. And joining me now to preview the numbers, Christopher P. Davis, a partner at Hudson Value Partners. Thank you so much for your time, Christopher. What are your expectations? I'm seeing the street is estimating revenue up 53%, EPS growth of 48%. What are your thoughts heading into this?
Yeah, thank you for having me. My thoughts on Nvidia, most important stock on planet Earth, it seems these days, and a big part of the market. What I'm looking for is just to see what exactly those margins are going to be, because I think that's really the question that we don't have an answer to going into earnings. NVIDIA is unique in that most of their key customers, the big hyperscalers, have all already reported. So we know from a sales perspective, this past quarter is going to be strong. Expectations are high going into Q3. And none of the hyperscalers have offered any indications that they're slowing any sort of AI-related spending. So just really want to watch that margin number to see if they can maintain those high levels. Consensus is looking for somewhere around 72% on the gross margins there. So that's one number we're keeping an eye on.
Okay, so that's the metric that you're going to be zooming in on. As far as the reaction, I've seen the option market shows that it looks like we could see a 6% implied move from Nvidia's post-earnings reaction. What do you make of that? I mean, particularly as far as, setting the tone for the broader tech sector.
Yeah, we're entering into a seasonally tough time for the market. September and October are typically, not the best times to be in stocks. And I think Nvidia has the opportunity, if they can, tell us that bull case for AI and the bull case for tech is alive and well, that can smooth things out. If they wobble, if there's any sort of questions, if they throw in any more sort of risk factors around trade, regulation, U.S. government involvement, things like that, the market's going to judge them harshly. I mean, this is a company that on a PE basis is expensive, but on a price to sales basis it's an incredibly demanding number at 30 times sales. So they have to keep the pressure on, and at some point they're going to run into the law of large numbers at a $4.4 trillion market cap. I don't know when that's going to be. It doesn't look like it's going to be anytime this year or next year based on the spending of their customers, but it's something we got to keep an eye on.
Absolutely, and we've seen imperfection gets punished in this earnings season, to your point, Christopher. Just wondering, the big wild card now that many are questioning, China. I mean, how much of a risk is this right now?
Well, it's certainly interesting that now they have to cede 15% of their sales from chips they're selling to China to the United States government. I mean, that's not great for margins right there. And there's also the back and forth as to the Chinese saying, well, we want to get your best chips. We don't want to get the, slightly detuned version that you've been selling us. But we are starting to see from some of our sources out there that things are picking up a little bit in China. So that could be a tailwind for not only Nvidia, but the broader global economy as well. I think the one big risk factor I'd like to flag on Nvidia, and I'd love to hear CEO Jensen Huang talk about, is just the U.S. grid power infrastructure, because if they're going to keep selling the amount of technology that they are selling and that the street is forecasting them to do over the next several years, there needs to be somewhere to plug it all in. And I don't think there's enough spending on data centers, power, the grid to make this all work. So that's got to be an important piece of this puzzle too if you're an Nvidia bull.
You raise a fascinating point because, as far as infrastructure is concerned, I mean, many say that the grid needs or is due for an upgrade there, particularly because something's got to power all these data centers. And if anyone is influential enough, it could be Jensen Huang, because as we know, as we've seen in the markets, as far as the reaction, when he speaks, things move. But I'm just seeing some price target boosts ahead of this earnings report from the likes of Stifel. We were talking about Baird also yesterday. It seems like the consensus is accelerating demand for the GB300 infrastructure. It seems that we are looking at, perhaps some pretty encouraging numbers on the GB200 as well. How are you looking at that in particular with regards to the Blackwell demand?
Well, I mean, in prior calls, it's been more about Blackwell availability than Blackwell demand. They seem to sell everything that they can make, and that's also why I want to watch those gross margins, because if there are any production issues or yield issues that they're having, that's probably where it's going to show up a bit. And the other thing we have to wonder is what are the usable lives of all these chips, right? The customers are putting them on 3, 5, and 10-year depreciation schedules, but Nvidia seems to come out with something new and better every 12 to 18 months. So how long are these going to be used? How long will they last? I mean, these are very high tech, high performance, high power chips, high energy chips, and none of them have ever run for 3 years at this point.
Yeah, you raise a very fascinating point. I mean, it's not been the demand story. It certainly has been the supply story for the Blackwell. Yes, we do need to keep that in mind. And particularly, when you look at just how fast things are evolving. And that's why Jensen Huang has also talked about, the potential for a China version of the Blackwell, also for the Chinese market. So the B30A, I believe it's been reported. So we have to wait for an update on that. I just want to broaden it out as far as the tech sector. As we look at it sort of more holistically, we did see a bit of a pullback as far as some of the big tech names last week. We did see this MIT paper. We saw Sam Altman's comments also about the fact that maybe we're entering a bit of an AI bubble. What do you make of those comments? And, particularly when you look at Nvidia really sort of setting the tone for the broader sector?
Well, I don't think we're necessarily in an AI bubble. And in part, what gives me comfort is NVIDIA's customers and the big hyperscalers at this point out there. They're not fueling this with debt. They're fueling this out of cash flow. So they have the ability to keep spending and keep investing. But I do think at some point, and I think the engineers are starting to see this, is that we have to shift from trying to make the best, ultimate, shiniest, most exciting product, whether that's, general artificial intelligence, to shifting towards things that companies can show are actually creating more efficiencies, saving money, eliminating workers, and they're just driving that overall, return on this investment, which has been massive so far. So I think if NVIDIA's customers and the software companies and tech in general can show the benefits to all these new features and new products, if they can do that, then we're not in a bubble. But if this is just an expensive party trick, or as some have said, just a little bit of a shell game, then it will be in a bubble. But I think the productivity gains and the efficiency gains are there, and it's just doing what Silicon Valley has done so well over time, which is product market fit. They have the product, they have the market, and they just need to be able to relate it all together and do so in a way that drives value for customers. And if they can do that, I think tech can continue to be a leader. And it's really exciting to see that the administration is starting to be supportive of tech, because they're realizing it's our best export and our most dominant industry in the U.S.
Yeah, it certainly has become one of a national security issue, which has been fascinating to see some of the developments, and particularly around Intel as well. Really appreciate the chat today as we look ahead to that key earnings report out of NVIDIA. Christopher P. Davis, thank you so much from Hudson Value Partners.